Hello. Welcome to our next chapter, that is company audit. So this is your 110 pages in ICI study module, which I have put it in maybe approximately 6 to 7 pages. There are no keys in this chapter, so you just have to understand the chapter. It is a very easy chapter. You have to go with the flow. So let's start. We are doing this from our audit in 100 pages notes. So these are the sections that will be applicable, that will be used in this chapter. That is 138 internal audit, 139 is appointment of auditors, 140 is removal resignation of auditor and giving of special notice. 141 talks about eligibility, qualification, disqualification of auditor. 142 talks about how much remuneration to pay to auditors. 143 talks about your powers and duties of the auditors and auditing standards. 144 talks about auditors not to render certain services, or some services they have mentioned that these auditors cannot render. 145 talks about auditors to sign audit reports. 146 talks about auditors to attend general meeting. 147 is your punishment for contravention, that is your penalty section. And 148 talks about audit in terms of cost in respect to certain company, that is your cost audit. So these are your sections that will be in this chapter. So let's start. This is your chapter overview. So going by overview, next is your appointment of auditor, that is section 139. So your appointment of auditor, I have made this into a tabular format. Please learn this, very easy. I have made this. You check any faculty's note, you will find it bigger, and complete information is here. So appointment of auditor, if he is the first auditor, that means this is the company's first auditor. In such a case, if the company is a government company, the appointment will be done by CAG, that is your Controller and Auditor General. So it will be done by the CAG, and if it is other than a government board, if it is other than a government company, in such a case it will be done by the BOD, that is your Board of Directors. Okay, and your subsequent auditor also, it is done by CAG. So what you have to make sure that if a government company, if it is a government company, your first or subsequent auditor, it is always done by CAG. However, if it is other than a government company, if it is other than a government company, in such a case your first will be done by your board of directors, and your others will be done by the members. Okay, so that is your subsequent auditors will be appointed by the members. Now within how many days? Within 60 days. Within 60 days from date of resolution, from DOR they have to be appointed, and over here it is within 30 days from DOR. Okay, over here it is 180 days from the start of the year, and it is, if members will be appointing, of course it will be done at the AGM. So subsequent auditor, if it is a government company, it is 180 days, otherwise it is 60 and 30 days. Okay, now hold office till, for how long will my auditor hold office? So it will be from conclusion of your first annual general meeting. That means when your first annual general meeting gets over, in case of the first auditor and subsequent auditor for government, it is conclusion of first AGM. However, for other than government, it is first AGM till sixth AGM. That means only and only till the first AGM will these persons be appointed. After that, it will be a tenure of 5 years. Okay. In case of failure to appoint first auditor, appointment shall be made by members in your EGM. I hope you understand the difference between AGM and EGM. So EGM is an extraordinary general meeting within 90 days in case of other than government company, and 60 days in case of government company. That means if this CAG and your BOD, if the first auditor was not appointed, then in such a case it will be appointed within 90 days in case of other than government. That means over here this 30 days will be 90 days, and 60 days in case of government company. Who will elect? It will be done by the members in the EGM. Okay, so I'll erase this so that it for those, even for those who have not purchased the notes, at least you can take a screenshot of this table. Perfect. So at least you can take a screenshot of this table so that you will remember this. Okay. Now next is filling of casual vacancy. Now what is a casual vacancy? When a casual vacancy is when your if there is a vacancy existing for reasons, in such a case casual vacancy of auditor. So if it is a other than government company, if the casual vacancy is in other than government company, in such a case it will be filled by BOD within 30 days. However, if this casual vacancy is due to Resignation, if the casual vacancy due to resignation, it will be filled by BOD within 30 days. Plus, it will be approved by the company at your general meeting. So, if it is due to resignation, your BOD, it has to be done by the BOD and also it has to be approved. However, if it is by otherwise, then only BOD within 30 days. If it is a government company, it will be done by your CAG within 30 days. So, what you have to remember, your casual vacancy will always be filled within 30 days. Just it will depend whether it is government company or non-government company. If it is a government company, it will be done by the CAG. If it is a non-government company, it will be done by BOD. If it is due to resignation, it will require BOD. Plus, you will also require your approval at your general meeting. And if the CAG was not able to do in such a case, the BOD within 30 days of failure, they will fill the casual vacancy of the auditor. In case of casual vacancy due to resignation, auditor to file form ADT3. If the casual vacancy due to resignation, auditor has to file form ADT3 within 30 days to the company registrar and CAG if it is a government company. So it also has to be done, but otherwise only to company and registrar. But if it is a government company, it also has to be done to CAG. Okay. Else penalty of 50,000 or remuneration, whichever is lower, that will be your penalty. 50,000 or the remuneration that you are being paid, whichever is lower. 500 rupees per day, maximum 2 lakh in case of continuing default. If it is a continuing default, 500 rupees per day, which will be maximum come to 2 lakh. That means, I think that would be what, I think 40 days. Correct. Next is your retiring auditor may be reappointed at AGM. That means your auditors are liable to rotation. So if your auditor is retiring, he will be appointed at AGM if he is not disqualified for reappointment. If he is only and only if he is eligible to be reappointed, only then will he be reappointed. He has not given the company a notice in writing of his unwillingness to be reappointed. If the auditor himself has given a notice that boss, I don't want to be reappointed, how will you appoint this auditor? So therefore, if he has not given to the company a notice in writing, next is special resolution not been passed at that meeting appointing another auditor. That means at that meeting, if we have not appointed any other auditor, only then. And your last is special resolution has not been passed at that meeting, providing expressly that he shall not be reappointed. So until and unless we have passed a special resolution in the meeting saying that both this auditor shall not be reappointed in such a case, if all these conditions are satisfied, only and only then your retiring auditor may be reappointed at your annual general meeting. So they have to do 4 conditions. That is, he should not be disqualified. He himself should not have given unwillingness to be reappointed, not special resolution not passed for another auditor, and special resolution not passed saying that this auditor does not have should not be reappointed. Okay, so these are your 4 points. Your existing auditor to continue to be auditor if no auditor is appointed at your AGM. So your existing auditor, whoever is your auditor at the current moment, he will continue to be auditor if there is no other auditor appointed at your annual general meeting. Then if you remember, we did section 144, which said that in some cases your auditor will not be allowed to render certain services. So that is your section 144. So accounting and bookkeeping services are not allowed. Internal auditor, if you are an auditor, then you cannot render internal auditor service. Investment advisory services, actuarial services, these in fact I should all make crosses. That means these are not allowed. Rendering of outsourced financial services, management services, rendering of outsourced. Oh, I put the same point twice. Rendering of outsourced financial services. Okay. Then there is design and implementation of any financial information system, investment banking services. These are not allowed. These auditor will not be allowed to render. Company shall not reopen its books of accounts. Company shall not reopen its books of accounts, not recast financial statement. That means make any changes to financial statement unless application has been made by your central government, SEBI, income tax or tribunal. So only and only if they have made an application to change, only then you will change. Otherwise, you will never reopen books of account. You will never recast any financial statement unless application has been made by CG, SEBI, income tax or your tribunal stating that your accounts were prepared in a fraudulent manner. Since your accounts were prepared in a fraudulent manner, that's why they might put an application to open your book. Or The company affairs were mismanagement, casting doubts on the financial statement. That means the affairs of the company that were not proper. There are certain doubts on the financial statements accuracy and reliability. Okay. And voluntary open a book for 3 financial year if financial statement or board report don't comply with section 129 after tribunal approval. That means only and only after you get the tribunal approval, only then you will be able to do this. Okay. Now coming to section 141. Section 141 talks about eligibility, qualifications and disqualifications of an auditor. That means who can be appointed as an auditor, who cannot be appointed. So only a chartered accountant can be appointed as an auditor. For a firm, majority of partners shall be eligible to be appointed as an auditor for the firm to be eligible, and your LLPs are allowed. So for you know that audit can be done by an individual, audit can be done by a firm, audit cannot be done by a company. So for a firm, all the partners, once you calculate a total number of partners, majority of the partners shall be eligible to be appointed as an auditor. That means they should satisfy all conditions. Only then will the firm be allowed. Remember, it is majority. Okay. So disqualifications of an auditor. So I put this in a colorful icon so that you remember these. There are basically 9 disqualifications. So first and foremost is body corporate is not allowed. If you are a body corporate, if you are a company, you are not allowed to be an auditor. Any director, manager, or KMP or employee of the companies are also not allowed to be auditors. Any partner or employee of two, that means partner and employee, any partner and employee of these people will also not be allowed. Fourth is any person who has business relation with CHAS. What is CHAS? Any business relation with company, holding, associate, or subsidiary. So anywhere where I've used CHAS, that means your company, holding, associate, and subsidiary. So any person who has business relationship with CHAS, they are also not eligible. Fifth is any person, relative, or partner. Person, relative, or partner who holds security in CHAS. And so even if you hold 1 rupee security, that is not allowed. However, a relative is allowed up to face value 1 lakh. Face value 1 lakh. Remember, it is not market value, it is face lakh. So if your relative holds up to face value of 1 lakh, it is okay. So up to face value 1 lakh. And if your relative owns more than 1 lakh face value, then you have 60 days. You have a grace period of 60 days to correct it and bring it below 1 lakh. Now your relative includes your father, mother, brother, sister. These are your upper two and your side, that is your brother, sister. Then you have your son plus his spouse and daughter plus spouse. So your parents, your brother, sister, your son, your daughter and their husband and wife. That's all. That is their spouse. All of these are included in relative. So they can have up to 1 lakh rupees and they will be given a grace period of 60 days if they have more than rupees 1 lakh. Okay. Now, if your person relative partner is indebted to CHA, that means they have taken some loan, they are indebted, they have to repay. To whom company holding associate subsidiary of amount greater than 5 lakhs also, they will be disqualified. And third is your has given guarantee of an indebtedness. You know how guarantee works. For example, the company has given a loan to me, and you guarantee to the company that if he does not pay, I will pay it to you. So you have some obligation towards the company, correct? You still have to pay if I don't pay. So therefore has given guarantee in of indebtedness of third person to CHAS of greater than 1 lakh. So, okay, so what limits did we do? Any person himself can have no amount of security. Okay, any amount of security he is not allowed. However, your relative will be allowed. How much? 1 lakh rupees. Your relative will be allowed. Okay, if your indebted cannot be more than 5 lakh. That means it has to be up to rupees 5 lakh. Okay, not more than 5 lakhs. And has given guarantee in of indebtedness of third person greater than 1 lakh. So if you have given guarantee of more than 1 lakh, again you will be disqualified. Okay, so these were your things. Then sixth point is relative. Sixth point is relative of your director or KMP. If you are a relative of the director or KMP, again you will be disqualified. Next is your if you are auditor. If you are auditor of 20 other companies, you will automatically be disappointed because there is a ceiling limit of 20 companies. If you have been convicted for fraud in the past 10 years, you will not be allowed. You will be disqualified. So from the date you commit fraud, 10 years from that point of view, you will not be allowed to be as auditor anywhere. And last is your section 144. So if you render any service mentioned under section 144 to CHS, remember over here it is only CHS. Over here we've always studying CHAS. Okay, so over here it is only CHS, that is company holding and subsidiary. That means if you are giving the service to associate, that is okay. So under section 144, we have already done the services under section 144. Okay. Now coming to our next part, that is rotation of auditor. As you know, auditors rotate. There is a particular time period fixed after which they rotate. So first of all, which section, that is your section 139.2. You should remember this section. Applicability, that means to whom rotation of auditors is applicable. So if you are a listed company, rotation will be applicable to you. If you are an unlisted public company, with paid up share capital, PSC stands for paid up share capital, greater than or equal to 10 crores, you will be liable, your auditor will be liable to rotate. So unlisted public company with greater than paid up share capital greater than or equal to rupees 10 crore. If you're a private company with paid up share capital, instead of 10 crore for private, it is 50 crores. Or if from borrowing from financial institution, banks, public deposits, it is more than 50 crores, rotation of auditors will be applicable. Okay, so banks, financial, this is also 50 crore, this is also 50 crore, just this is 10 crore. Listed company, so as it is, you have to, your auditors are liable to rotate. Okay, so your tenure of individual auditors will be 5 years, and there will be a 5-year cooling period. That means once you have been an auditor of 5 years, you will have to wait for 5 years before being reappointed. So therefore, there is a cool off period for 5 years. And for audit firm, they say it is 2 terms of 5 years. Therefore, a total comes to 10 years. But please always write 2 terms of 5 years. Therefore, I have written 5 plus 5 years, and they have a cool off period of again 5 years. Example, Messrs PQ are term ended and partners are PQ and R. And Messrs RST with partners R, S and T shall also not be eligible to be appointed since both have the common partner R. If you see, PQR was already the auditor. So over here R was already there, and RST wants to become the auditor, but R is already over here. So because of this cooling period of 5 years, they will not be able to hire RST also as the auditor because both have partner R as common. Okay. A break in between shall be considered. I will erase this so that you, you are able to read this. A break in between shall only be considered only if there has been a break for 5 years or more. Only if the break has been for 5 years or more will it be considered. Otherwise, it will not be considered. Okay. So where a company is required to constitute audit committee. So if they come under the limits where you have to set up an audit committee, in such a case all appointments made shall be after taking into consideration of audit committee, or audit committee consideration shall also be taken. Board to take into consideration and recommend name in your annual general meeting. If board disagrees, that is, if the board disagrees with the recommendation, then you will refer it back to the audit committee citing reasons for disagreement, because the audit committee will also give some recommendation. And if the board is, and if the BOD, if the board is not okay with the recommendation, they will disagree and they will give it back to the audit committee. However, where no audit committee is required, board of directors to recommend to members in the next annual general meeting. The board will recommend to the members, and that is where it gets over. Okay. Section 142, if you remember, we talked about remuneration of auditor, very small, nothing. Remuneration of auditor is fixed in general meeting, that is where the members are there, or any manner specified. BOD may fix remuneration of first auditor. Remuneration to also include any facility provided to him. If we are giving him any facility, if suppose we give him a car to travel, this facilities will also be added and it will be considered as remuneration. Okay. Next part is your removal of auditors. Removal of auditors. So board resolution for removal of auditor. First, you have to pass a board resolution for your removal of auditor. Then within 30 days, you should make an application to CG. So once you have passed a board resolution, then within 30 days, you have to make an application to CG in form ADT 2. Remember, ADT 3 was when auditor resigns. When auditor resigns, that time you have to submit form ADT 3. Over here it is ADT 2, that is application to CG, that we have already passed a board resolution to remove our auditor. The CG will approve this application within 60 days. That is within 60 days of approval. Once you have received the approval, within 60 days from date of the approval, Your general meeting should be held for passing special resolution, because they will also pass a special resolution to remove the auditor. Okay, if the auditor acted in a fraudulent manner or colluded in fraud, that means if he did anything in fraud, then application by CG or tribunal suo moto, that means either CG has made an application or tribunal suo moto, CG will make an application to tribunal, and then within 15 days they will order removal of auditor. So either they, ultimately what you have to remember, that ultimately it will be made by the tribunal. So either tribunal suo moto or an application made by your CG, it will order removal of auditor, and CG may appoint another auditor. What you have to remember, even if tribunal suo moto removes an auditor, that means by themselves, even in such a case, it will be the CG who will appoint the other auditor. Then in both the cases, CG will appoint the other auditor. The auditor removed shall not be eligible to be appointed in any company for a period of 5 years from the date of passing of order plus action under section 447. Okay, so section 447 also we will be doing in this chapter in the end. Appointment of auditor other than retiring auditor, that means if your auditor that has retired, you are not hiring that same auditor, you are not appointing that same auditor, you are getting another auditor. In such a case, what happens? So you have to take a special notice at AGM. The company will send notice to retiring auditor that, boss, we are not hiring you, we will send them a notice. And the retiring auditor can send a representation in writing that, was if he wants to communicate something, he can send a representation in writing. Company to send representation, whatever this auditor has written, company to send representation to every member to whom notice is sent. They will send it to every member to whom the notice of the meeting is sent. If tribunal is satisfied that such right is abused by the auditor, that means if the auditor is highlighting his achievement that he has done, or if he is misusing this right given to him, the representations need not be sent to any member. In such a case, you need not send it to the member, because my auditor is misusing this right given to him. Okay, coming to your next point, that is your ceiling on number of audits. So maximum you can become auditor in 20 companies, excluding OPC, that is your one-person company, your dormant company, small and private companies with paid up share capital. With paid up share capital, this arrow is wrong. This with paid up share capital, it should be less than 100 crores. So it should, if their paid up share capital is less than 100 crores, then it will be excluded. If a firm has three partners, and maximum limit for firm will become 3 into 20, because each partner has a limit of 20. Therefore, in such a case, it will become 60. It is possible that only one partner signs all 60 reports. It does not have to happen that all three of partners can maximum sign 20. If my firm has three partners, each partner has 20, therefore total 60. It is also possible that one partner signs all 60 reports. Maximum 60 companies in case of tax audit. So for the purpose of tax audit, it is 60 companies. Okay. Rights of auditors, of course, it has right to access books, to obtain information and any explanation from officers of the company. Then to receive notices and attend general meeting. They have a right. It is not an obligation. They have a right to attend general meeting. To report to the members on accounts examined by him, and last is to lien, that is on books and documents in his possession. That is whatever books and documents he has in his possession, if he is not paid his fees, he is allowed to keep those with himself. This is called your right of lien. Okay, coming to your next part, that is duties of director, duties of auditor. So duties of auditor, your first duty is inquire on certain matters. On what matters? Loans and advances made prejudicial to the interest of company. If any loans and advances that are not in the best interest of the company, that hurt the interest of the company, he will allow to be, it is a duty to inquire on these matters. So this was your inquire on certain matters is the first point. These are your sub points. Then next is transactions represented by book entry which are prejudicial to the interest of company. If any book entries have been passed which are not on the best interest of the company. Shares and securities sold at a loss. Loans and advances made by company which are shown as deposits. Any loans and advances that we have done, but it is shown as a deposit. Any personal expenses charged to revenue account, any personal expense of any person, if that has been charged to the revenue account of the company, that means we are showing expense of the company, of course, that should be inquired. And next is cash actually received for shares issued against cash, whether we have received the cash that we have issued against shares that have been issued against cash, whether we have actually received the cash or not. Other duties is sign the audit report, comply with, of course, your auditing standards. He has to make an audit report on matters specified by CG. If CG has specified any matter, that also he has to report, and state reason for qualification or negative report. That means if you are giving a negative report, you also have to give reasons as to why you are giving a negative report. And last is your fraud reporting. So for fraud reporting, if your amount is less than 1 crore, if your amount is less than 1 crore, in such a case, auditor to report to audit committee within 2 days of knowledge of fraud. So if you see either fraud is less than 1 crore or your fraud is 1 crore or more, in both the cases, your first step should be to report to audit committee within 2 days of knowledge of fraud. That is, whenever you get to know about the fraud, within 2 days you should be telling to the audit committee. Now, what will you be telling? You will tell the nature. If it is less than 1 crore, you will tell the nature of fraud, amount of fraud, and which parties are involved as per your knowledge. And this also has to be included in the board report. Okay. However, if the amount is greater than 1 crore, in such a case, once you have given to the audit committee, if within 45 days the audit committee has replied, if the reply is received, you will forward report plus reply to your central government within 15 days. That is your report plus whatever reply the audit committee gives, you have to give both of them to CG within 14 days. However, if reply is not received, that means your audit committee does not respond within this period of 45 days, within this period of 45 days that they have given you, then in such a case, you will forward the report and a note that no reply was received to CG. So in both cases, one is you receive the reply, you give to CG. Other cases, you did not receive reply, you give to CG and you tell them that boss, they did not reply to me. Okay, so this is your duties of auditor with regards to fraud also. Okay, and coming to our last part. Okay, coming to our this is our last fee, that is your cost audit. Cost audit is section 148. So who can be cost auditor? Cost auditor can be cost accountant appointed by board. No person appointed under section 139 shall be appointed. Okay, so 139 is your auditor because PG has notified certain companies based on turnover to whom cost audit shall be applicable, and the limits that are done, they are not in the ICI module. Therefore, I have not included in the notes. Okay, other faculty might have taken the limits from the section itself, but in the ICI module there is no limits given. Therefore, I have not put any limit. Cost audit not to apply to companies. On certain companies, cost audit shall not be applicable even though they cross the threshold. So if the revenue from exports is greater than 75% of total revenue, that means major of your revenue comes from exports. So 75% in such a case, cost audit is not needed. Or if you're operating from a SEZ, that is your special economic zone, or if you're engaged in generation of electricity for captive consumption, in such a case, if it is being used for captive consumption, that means it is for your own consumption. In such a case, you need not do cost audit. They shall maintain cost records in form CRA 1. Appoint auditor within 180 days of commencement of every financial year. Within 180 days of every financial year. Company to file notice of such appointment CG within the notice is to be filled in form CRA 2. So first they have to maintain record in CRA 1. Any notice of appointment to CG has to be done in CRA 2 within 30 days of board meeting in which appointed, or 180 days from commencement of year. As I said over here, 180 days. So 30 days of board meeting or 180 days from commencement of year, whichever is earlier. Okay, so it is 30 or 180, whichever is earlier. 30 days from board meeting in which appointed, or 180 days from the commencement of your year, whichever is earlier. Okay. Cost audited to continue for a period of 180 days from closure of financial year, because from closure of financial year, your new auditor has not been appointed, correct? So 180 days, it will not be empty. So therefore, cost auditor to continue for a period of 180 days from closure of financial year or till he submits the cost audit report under CRA 3. So what we did, CRA 1 was where they have to maintain cost record. CRA 2 is when you tell CG. When you tell CG that boss, I have appointed a cost auditor, that is CRA 2. Then your CRA 3 is in which the audit, he submits the cost audit report. And company within 30 days shall furnish the report to CG inform CRA4. So this CRA3 is submitting to company, CRA4 is company submitting to your TG. Inform CRA4 in XBRL format. Okay, so that is a different format. You don't have to go into that as to what your XBRL format is. Okay, so this is our okay. This is not our last part. We still have one more page after this. So any punishment for non-compliant, that is section 147. So if you have non-compliant from section 139 to 146, if it is company, it will go minimum 25,000 to maximum 5 lakh, 25,000 to 1 lakh, and if it is an officer in default, it is 10,000 to 1 lakh for section 139 to 146. However, if it is provision 139, 144, 145, an auditor knowing unknowingly, that means if it was not intentional, if it was a mistake, then in such a case it will be 25,000 minimum and maximum will be 5 lakh or 4 times the remuneration, whichever is lower. Or if auditor knowingly does this, see over here the amount has doubled from 25,000, it has gone to 50,000 is your minimum penalty, and your maximum, instead of 5 lakh it becomes 25 lakh, 5 times, and 4 times the remuneration becomes 8 times the remuneration, that means double. Okay, so this became double, your 4 times became double 8, and your 5 lakh became 5 times, that is 25 lakh. Okay, now coming to your next part, that is your NFRA, that is your National Financial Reporting Authority. So your National Financial Reporting Authority is is applicable to the following companies. Any listed, if you're listed in or outside India, it is applicable. Or if you're a unlisted public company with paid up share capital either more than or equal to, paid up share capital either more than or equal to. So this is your pot. Okay, so POT, paid up share capital, outstanding loan, debenture, deposit, or your turnover, that is your pot. If that is greater than 500, 500 and 1000, 500, 500, 1000, pot 500, 500, 1000, pot 500, 500, 1000 crores. Okay, so listed in or outside India, or if you're an unlisted public company with pot, paid up share capital, outstanding and turnover 500, 500, 1000. Okay, so insurance, banking companies and companies engaged in generation or supply of electricity, it will be applicable irrespective of turnover. Any business corporate, any body corporate registered outside India, which associate or subsidiary of companies mentioned above, if net income or net worth is more than 20% of consolidated income or net worth. What does this sentence mean? So if any body corporate is registered outside India, okay, so body corporate registered outside India, whose associate or subsidiaries of companies mentioned above, if net income, that means if their associate or subsidiaries come under these that we have mentioned above, if their net income or net worth is more than 20% of the parents consolidated income or net worth, then it will be applicable to them also, that is the body corporate registered outside India. Your NFRA is constituted by your central government, it is constituted by CG. Every body corporate except company shall within 15 days of appointment of auditor file form NFRA 1. Auditor to file return with NFRA on or before 30th November every year in form NFRA 2. Okay, so NFRA 1, what is being used for NFRA 1? It is every body corporate shall within 15 days of appointment shall file NFRA 1, that is for appointment of auditor. Then auditor will file return in NFRA 2 by when? By 30th November of every year. So now you are thinking, sir, what is this NFRA? You are saying NFRA, you never explained NFRA. So that is because functions of NFRA has been given. So functions is recommend your AS and SA, that is your accounting standards and your standards on auditing. They will receive recommendations from ICI for new AS and SA. Okay, monitoring and enforcing compliance with AS. So that is your review working papers and communications, evaluate sufficiency of quality control systems of the auditor, perform such other testing of the audit supervisory and quality control procedures, seek additional information or may require the personal presence of the auditor, shall punish its shall publish its finding relating to non-compliance on its website. Any non-compliance that is fine, it can publish on its website also. Okay, so it is a shall, it is not can, it will publish. Okay. Then next is your overseeing quality of service and suggest for improvement. NFRA may direct an auditor to take measures for improving quality of audit. Duty of auditor to make the required improvements and send the report to the NFRA. These things are taken very seriously. If they have recommended you something, you have to make sure that you are doing it. And last is NFRA shall monitor the improvements made by the auditor. So first you will check the quality. Second is the auditor shall send the report. And third is you will closely monitor the improvements. Okay, punishment in case of non-compliance. If it is an individual, it will be 1 lakh up to 5,000, 5 times the fees. And in case of firms, it will be 5 lakh up to 10 times the fees. So this has 5 times, this has doubled. Oh, and debar for 6 months to 10 years. That means you will be debarred. Okay. Now coming to your, is this for our last part? Yes. So we will be doing Caro in a separate video. So therefore our company audit will finish on this page. The next part comes about dividend. So your dividend can be declared out of divisible profits of current or any balance of previous year after providing for depreciation. I am not going to understand what your freezes or what your divisible profits are. I hope everybody knows this. It is decided by management with no say of shareholders. Shareholders have no say in what how much dividend they should be paying. This is your management's decision. Unless the article so provide, that is unless it is written in your AOA that your members can say, only then, otherwise no. Determinants of dividend policy as follow, that is what on what factor they will decide how much dividend to pay. That is your nature of earnings, reinvestment alternative, that is where you can invest this amount, dividends and liquidity, dividends and working capital, tax brackets of shareholders, that is if they are paying higher tax, or stability of dividend. If you want to maintain steady dividend, in such a case, these are your policies. Okay. Now with regards to dividend, they have given a lot of paragraphs. All you have to do is you have to remember this. So for those students who have not taken the notes, you can take a screenshot of this portion only, and you will cover your entire dividend part. So what happens is any dividend has been declared. Now, from the date of this declaration, company shall within 5 days, they should transfer it to a separate account. Since they have already declared the dividend, they have to transfer this to a separate account, how much amount they have declared. And within 30 days of dividend declaration, so within 30 days of dividend declaration, it should be paid to my shareholders. If the shareholders, if in case the shareholders, if you are not able to pay to the shareholders, if you are not able to locate, then within 7 days it should be transferred to your unpaid dividend account. You cannot keep it with you that boss, oh, I couldn't find the shareholder, this is my money. No, you have to transfer it within 7 days to my unpaid dividend account. Within 90 days from transfer to unpaid, within 90 days from transfer to unpaid dividend account, you have to publish names on the website. And from when you have transferred it to the unpaid dividend account, within 7 years, you have to transfer it to your investor education and protection fund account. Okay, so that is within 7 years. I will erase this so that you can take a screenshot. And this is all you have to remember for dividends. Okay, this is everything that you need to keep in mind while studying dividend. Okay. Failure to pay or penalty on. So if a director, if knowingly defaults, minimum 1,000 per day plus imprisonment up to 2 years, and for company it will be interest at the rate 18%. That is, if you fail to pay the dividend that you declared, this will be the penalty. Next is your investor education protection fund that I told you, IEPF. So sources of fund, amount given, that is from where do they get the money. So amount given by CG by way of grants, any amount transferred from unpaid dividend account. If you see from here, transfer from unpaid dividend account, it is transferred to IEPF. Okay, so they get this money. Then any matured debentures with the company, that is debentures are matured, but there is no person coming to claim it. In this case, it goes to IEPF, and this amount is spent to educate the investors. Okay. Now, use of fund, refund of unclaimed dividend, matured deposit, debentures. If the person comes at a later point of time, the investors are giving the money back. You do not say that boss, how you came late, now this is our money. No. In such a case, this amount will be refunded to them. Promotion of investor education and awareness. and reimbursement of legal expenses under section 37 and 245. Okay, so any legal expenses also will also be paid out of this reimbursement. Okay. Now, audit procedures for payment of dividend ensure that dividend is paid out of free reserves. I hope everybody knows what free reserves is. You cannot pay out of capital reserves, only out of free reserves. And whether dividend was declared only in AGM. Dividend paid within 30 days of declaration. This 30 days. Intimation sent to stock exchange in case of a listed entity. Whether dividend declared out of profits after depreciation, as we already did this after providing for depreciation. Okay, whether board resolution recommending dividend was passed. Over here we said it is by the management. It only the board decides how much dividend has to be done. Dividend declared in GM should not be greater than what has been recommended by board. Whatever has been declared in your general meeting, that should be either equal to or less than what is recommended by board. Whether corrective action taken against non-payment complaints, if there are any complaints where the investor says that what I have not been paid the dividend, in such a case whether corrective actions have been taken or not. Okay. Register of members, debenture holders may be closed for maximum 30 days at once and 45 days aggregate in a year. So if the register you can close, the register of members, register of debenture holder, that can be closed maximum for 30 days at once and 45 days aggregate in a year with a 7-day notice. Okay, you cannot just close the books, you have to give a 7-day notice. Interim dividend declared shall not be higher than the average dividends of preceding 3 financial years. Interim dividend is dividend that you have declared during the year. It is mid-year. It is like a bonus dividend. So interim dividend declared shall not be higher than the average dividends of preceding 3 financial years. That is my last 3 financial years. Average, it should not be more than that. If there is a loss in current financial year, only and only if there is a loss in current financial year and you are given an interim dividend, then it should not be greater than the average of the dividend of 3 previous financial years. Next, if dividend are declared after the balance sheet date, but before financial statements are approved for issue, the dividends are not recognized as a liability at the balance sheet date. Such dividends are disclosed in the note. That means if it is after the balance sheet date, that means if it is after 31st March, but before financial statements are approved for issue. So before your financial statements are actually approved, if it is between this period, then this dividend is not a liability. It will just be shown in your notes. In case of default in transferring to unpaid dividend account, if you did not transfer to unpaid dividend account, you have to pay interest at the rate 12%. That means your unpaid dividend account over here, if you did not transfer to this account, you will have to pay interest at the rate of 12%. And last part of the chapter is your limited liability partnership. So limited liability partnership, which we also call as LLP. So required to maintain annual accounts and file with registrar every year in every year form 11 within 60 days from year closure. Required to file statement of account and solvency form 8 within 30 days from end of 6 months of financial year. Any person free to inspect at the rate of rupees 50 certified copy and 5 rupees for any document of LLP. So this is basically your photocopy charges that they charge. Accounts to be audited only if turnover is greater than 40 lakhs or contribution is greater than 25 lakhs. So that is the accounts of LLP. Accounts of LLP will be audited if turnover is more than 40 lakhs or contribution is more than 25 lakhs. Either of these it will be audited. Appointment of auditor will be at any time of first financial year, but before end of first financial year. This is appointment of auditor. That means any time for first financial year at any time, but before end of first financial year. That is before it ends, there should be appointed. And uh, for the next financial years, at least 30 days prior to end of each financial year. Okay. Now, advantages of audit in LLP. So they are saying that boss, even if you do not come under these limits, what are the advantages of getting audited? Why you should get audited? So it helps in detecting any errors and frauds. Disputes, if any, between the partners in the matter of accounts can be settled through an audit. Any banks and financial institution will lend money only on the basis of audited accounts. They will have to get the books of accounts audited if they need a loan. Suggestions by auditor will be helpful in improving management of the LLP. And last is your for setting accounts between partners at the time of admission, death, retirement, insolvency, or insanity. So, for settling the accounts in such a case, your audit will be very helpful. And with this, we are done with your company's audit chapter in a very, very, very quick way. And in the next video, I will see you with Caro 2020. And I have also made mnemonics to learn this. So, do watch that video.